Welcome to this podcast, Bridging the Gap, Understanding Frameworks and Evolving Concepts in Green Inclusive Finance. My name is Natalia Real Carrillo, Director of EDERA Sustainable Solutions, and today moderator of this podcast, led by the European Microfinance Platform from the Green Inclusive and Climate Smart Finance Action Group, which has been coordinating a working group on green inclusive finance frameworks. As you know, strengthening resilience to climate shocks, and especially among vulnerable populations, requires contributions from all members of society, with an important role to be played by inclusive finance institutions or financial service providers. However, green inclusive finance and its related concepts are still relatively new and not always understood. The aim of this podcast is to gather relevant institutions in the sector which have been working to create frameworks, tools, and different guidance methodologies such as the Green Index 3.0, the Dimension 7 of the Universal Standards for Social and Environmental Performance Management, the Green Pathways Framework, the Climate Adaptation and Product Taxonomy, the Climate Agenda, and also the 4 Ps and roadmap from different organizations that have been adapted to the various needs of the sector. The European Microfinance Platform, Cerise+SPTF, the Center for Financial Inclusion, CGAP, and the Alliance for Financial Inclusion will showcase today their joint work to understand the complementarities and differences of their resources and how this can be used to different stakeholders in the financial inclusion sector. The objective of this session is to provide a reference tool for all inclusive finance actors that are seeking clarity and more guidance in integrating a green strategy into their institutions and developing products and services to enhance their clients' resilience. So we're going to start with this podcast and with the interventions here with the European Microfinance Platform, the Green Inclusive and Climate Finance Action Group. And for this intervention, I'm inviting Joana Afonso, inclusive finance expert at e-MFP and responsible for the action groups, and Davide Forcella, director of the Just Institute, who has been co-head of the action group since 2014. Now, Joana, I'd like to invite you to tell us more about e-MFP and the work that you have been doing in green inclusive finance from the action group.
Thanks, Natalia. So e-MFP is a network of organizations and individuals active in the financial inclusion sector in developing countries. It was created in 2006 by initiative of the government of Luxembourg to encourage networking among different types of stakeholders and promote knowledge creation and sharing within the sector. Being a network of diverse stakeholders, including multilateral development agencies, investors, financial institutions, NGOs, consultants, among others, e-MFP is in a privileged position to, on one hand, identify the increasing diversity of approaches to green inclusive finance and how this can lead to confusion among stakeholders, and particularly financial service providers who are trying to build resilience among their clients to the effects of climate change and environmental degradation. And on the other hand, is also in a privileged position to coordinate efforts among standard setters and support organizations in the sector to align on the language and ensure that communications on different frameworks and tools are clear on their purposes and use cases. This is the main objective of the Green Inclusive Finance Standards Working Group, an initiative of the Green Inclusive and Climate Smart Finance Action Group of e-MFP that was starting during the European Microfinance Week in 2023 and involves the other participants in this podcast, so CGAP, CFI, Cerise+SPTF, and AFI. But the work of e-MFP and particularly of the Green Inclusive and Climate Smart Finance Action Group started way back in 2013, so a decade ago, when a small group of members, including Microenergy International, HADA, Alterfin, and FMO, foreseen how crucial it will be for the sector and for their vulnerable clients to deal with environmental issues. The Green Inclusive and Climate Smart Finance Action Group was thus created to bring together inclusive finance practitioners to discuss, exchange experiences, find common paths in dealing with environmental issues, as well to develop new practical tools and frameworks to advance inclusive and climate smart finance and it is today a unique think tank in the sector leading on this work. A decade after starting, the Action Group has grown from 6 members to more than 75 organizations and 150 individuals working on green inclusive finance, and has developed a set of tools and resources that are available to all the sector through the e-MFP website and particularly the Action Group webpage. These include webinars recording that were done along this period of the 10 years, specific trainings both on the tools developed, like the Green Index, but also introductory training to the Green Inclusive Finance. And this is a training with 7 modules that is available in 3 languages, so English, French, and Spanish. We have an online library on the topic. We have also a new project since 2023 of mapping initiatives across the world on green inclusive finance, and we have 32 institutions and projects profiled using the Green Index framework that illustrate what FSPs and what their partners can do to support their clients on developing and building resilience to climate. Among all the resources available is also a number of studies, and I would like particularly to highlight the state-of-the-art of Green Inclusive Finance 2011-2019, research that has built on the experience of the Action Group and of its members, and the data of more than 1,000 audits to understand the status of green inclusive finance in the world and what are the challenges and the gaps. So the most important framework, and the one that has been developed for a longer time, is really the Green Index. And this is a full-fledged framework that helps guiding and institutions in starting their green strategies and assessing what they are doing. And about the Green Index, I think Davide will tell you a bit more and develop how this can be important for institutions.
Thank you very much, Joanna. Let's go more in depth on the Green Index, and here, Davide, will be great if you can explain us more about the tool. For whom is it? What is the framework about? When should financial stakeholders use it, and what recommendations you give for the implementation?
Thanks a lot, Natalia, and thanks a lot, Joanna, for this introduction. So before going into that, of course, a bit of history. We have been start working back in 2014 to try to understand if there could be a standard or a framework for the inclusive financial sector to assess their environmental performance. And already back in time, we've been observing that quite some institutions were already developing certain practices like green products or strategy or assessment tool. And so based on the actual experience of this institution, together with pre-existing tool as the one that may be developed by Marion Le from the very beginning, we have been start putting together the knowledge of the various few partners at the very beginning of the Action Group and design what was back in time 2014, the Green Index 1.0. That has been put into the market for a while. We've been collecting feedback from various stakeholders and microfinance institutions, and then we've been developed the second version already in 2016. That's for the first time included some new indicator, in particular quantitative indicator, also to try to assess at which level there is an outreach of green inclusive finance among micro enterprises, poor households, smallholder, etc. And with that, we'll be running for a while by collecting information, as Joanna was referring to, that allow us to collect enough audit, more than 1,000, to build this report a couple of years ago. And last but not least, we launched the new version in 2019-2021, where we worked for a couple of years aligned with all international standard practices, etc. And in particular, we co-launched together with the SPTF and Cerise joint work to develop for the first time the dimension of environmental assessment within the universal standard for social and environmental performance of the SPTF. That's what I would like to propose to you. Today, the Green Index 3.0 is the result of more than 300 contributors that provide detailed feedback on their design and more than 8 years of implementation, and is a tool that is directed by any financial institution that provides services to partially excluded segments like smallholder, poor household, micro enterprise, small enterprise. Namely, microfinance institution could be, but could also be, cooperatives that provide financing, etc. And is a tool that, first of all, it allows to assess the environmental performance of an inclusive financial service provider overall, but it also goes beyond that. Yeah? By going through this tool, you go through the best international practices, as we explained before, building since like 10 years of history of what an institution could do to move forward into the green inclusive finance path. So it's sort of an awareness raising, for the institution, what you could do, what you're actually doing that maybe you are not really monitoring, but also is a form of trainings, what you could do, how you will do, because each question is telling you how you should put in place these practices. And of course, beyond that, and in particular, is an assessment tool. It allows to position an institution against best practices, but also against peer, regionally, or by type of institution, and give you a score on the environmental performance overall, and also along a set of standards. It also provides the opportunity for an institution to define the gaps that it has, define priorities of action, and eventually an action plan to then move forward in their implementation of green inclusive finance, and then year by year use the tool to monitor the advancement and to report on the progress. I take a last minute to tell you one thing more, that is actually what is contained into the Green Index 3.0. First of all, it provides an assessment along 4 standards. Strategy, first, how you define and you put in place an environmental strategy. Capacity to identify the risk, environmental risk, of course, as well as opportunity for an environmental transformation. That's internally within the institution or for the clients of the institution. So what we call indirect and direct. Also, the standard 2, that is the third standard we have, is about instead management, this risk and opportunity, how the institution can put together the information we collect in terms of identification and then making management of the environmental risk, as well as grabbing the opportunity. And last but not least is about product and services that are divided into financial product, of course, like green credits, for example, but also insurance, savings, etc. And then non-financial, like training, capacity building, partnerships. Overall, is a tool that also includes quantitative indicators that try to assess the actual outreach of all these dimensions. And on top of that is structured along 3 dimensions, that is the impact that the institution and the client has on the environment, how much we are vulnerable to facts like climate change and biodiversity erosion, as well as what is the possible green opportunities in terms of revenue generation, as well as social mission that could have the client and institution to move forward in the green agenda. With that, I hope I gave you quite an introduction, and I hope that everyone around the table will be willing to look into that and try to find the best scope for their objective in green inclusive finance. Welcome to come to our webpage and know more about it.
Yeah, thank you very much, Davide and Joanna, for this introduction, and also an invitation for the stakeholders to explore the tools, also available in digital version in the website. So we continue with the overview of the frameworks for green inclusive finance. The next one from Cerise+SPTF, who have been working with the Universal Standards for Social and Environmental Performance Management already for a while. With me is Cerise+SPTF, and I'd like to invite you here to this podcast to tell us about more how is Cerise+SPTF approaching green inclusive finance, and how has been your work so far.
Thank you, Natalia, and happy to discuss and exchange with the community. At Cerise+SPTF for green inclusive finance, we have 2 key messages: dare to be radical and no time for losing time. So we want to push the sector and help the sector. Financial inclusion is a strategic approach to raise awareness and to build resilience for vulnerable populations. We have standards, we have tools, technical resources, we have experts to build strong and concrete environmental strategies. The regulation also is pushing for ESG reporting, so we can environmental and social risk management, and to inspire also the regulators to value and supervise sustainable approaches. So that's the way we exchange, for example, with AFI on this project that you are podcasting. CGAP and European Microfinance Platform are developing resources. We have our SPI online platform. We have a resource center where we share practical approaches, templates, case studies, toolkits. So we need to make all these resources easily available all together, and that's also why we are joining forces. Networks and financial service provider can be supported to build operations, strategies towards environmental risk management and green products. We should push also investors and investees to understand the risks of their portfolio. So yeah, it's not so easy. For example, in Kenya, with a portfolio, for example, invested in 20% in agriculture for a financial service provider, the question is how to map those risks for drought, for flooding. Is it mapped by branch, by crops? Maybe also by share of agricultural income in the household's overall income. So you see there are plenty of questions that we are still working together. And in this case, for example, once the level of risk is identified, what can be proposed for the financial service provider? Water tanks, diversified crops, crops resistant to drought, how to raise awareness. Yeah, so all together we develop practical answers to be shared with the different stakeholders.
Yes, so talking about these practical solutions for stakeholders, I'd like to know, and if you can share more about what frameworks have you been developing from Cerise and SPTF, for whom are them, what recommendations do you give to the interested parties on these frameworks?
Okay, so what we see is that we need some standards and assessment to guide analysis, risk management practices to implement those strategies. We know that it's new topics for most of the actors and very important, but difficult to start with. So this is what Cerise+SPTF have developed in collaboration with the Green Action Group of e-MFP and the Green Index. So we have an additional dimension on the universal standards for social and environmental performance management in the sector of financial inclusion, so that we can guide financial service provider and their partners, the networks, the investors, the regulators, to work on environmental performance management. So this is the dimension 7 of the universal standards, checking whether and how the financial service provider build their environmental strategy and system in place, how they identify and manage environmental risks and opportunities, and how they can offer financial but also non-financial products and services to achieve environmental goals. So this tool is available as an online audit tool, either included in the framework of the social performance management approach in general. So in the SPI set of tools, so you can check ESG risk, or you can guide investor due diligence, or conduct a complete audit. Or it can be used also as a standalone assessment called the Focus Green, fully aligned with the Green Index. So today on SPI Online, we have about 3,000 audits that have been conducted from about 2,000 financial service providers. And so with SPI 5, those complete audit tools, including dimension 7, we have about 1,000 green assessments conducted to guide improvement of practices for environmental performance management. So the idea is that those tools give a clear picture of strengths and weaknesses and a roadmap to focus on a solid environmental strategy. And they can build the resilience of vulnerable population with this clear roadmap. So all the standards, tools, and resources are built or created by Cerise+SPTF in collaboration with the group that we are all working with, and that they are available for any user on SPI online platform. Whoever wants to pick it up can do it. But we also need to collaborate with all stakeholders as we do in this project. We need to replicate at the country level. So for that, we promote a market system approach. We want to put all the stakeholders to work in one market. So we would work with consumers, with financial service provider, with investors, with associations, with regulators, in the same market, to reinforce the goal of responsible financial inclusion and environmental performance management. And I'll finish by an example. In the Philippines, for example, this green focus is built with the national network, MCPI, with the financial service providers, with our network of experts, what we call the USSEPM Pro network, with the TA providers and funders, ADA in particular, with the regulation, the central bank, BSP, and the Microfinance NGO Regulatory Council, MNRC. And the objective of having all the stakeholders together is to define the national strategy, to train the local experts, to raise awareness and assess the financial service provider, to design maps identifying the environmental risks in the country, to support product design, for example, for sustainable agriculture with pilot farms, and at the international level as well, and as well as at the country level, we must join forces to tackle environmental challenges. And yeah, that's a concrete example on how, on this project we work together, and at the national level, we can raise awareness and change practices.
Continuing on the work on green inclusive finance from the different stakeholders that have been invited to this podcast, that have been actively cooperating and collaborating in this working group. Now I have the pleasure to invite Luciana Alvarez, Senior Research Manager at Center for Financial Inclusion. And Luciana, please here let us know and share with us what has been the work that Center for Financial Inclusion has been developing in green microfinance.
The Center for Financial Inclusion is an independent think tank housed in Acción that works to advance inclusive financial services for billions of people who currently lack financial tools needed to improve their lives and prosper. We understand that access and use of financial services can significantly impact how vulnerable populations respond to climate risks. For this reason, we focus on climate risks and resilience as one of our 4 main work streams of our current strategy, that also include consumer protection, women's financial inclusion, responsible finance practices. CFI leverages partnerships to conduct rigorous research, test promising solutions, and share our learnings through convenings such as the Financial Inclusion Week and the Responsible Finance Forum. CFI's Climate Risk and Resilience Workstream focuses on understanding the financial needs of low-income and vulnerable populations in responding to climate change. For this, we partner with climate-focused organizations and financial service providers to conduct rigorous research, evaluate existing green finance products and services, and test innovations that help low-income to address, adapt, and build resilience against climate shocks stressors. As part of our research agenda, CFI developed the Green Inclusive Finance Framework in 2020 and launched a report in 2022. Since then, we've been promoting this framework at different conferences to influence change in our industry.
So from this report, and we're interested on the framework that you have proposed. Luciana, could you let us know more about the framework? For who is it intended? What recommendations you give to stakeholders to get more in depth on how you envision green inclusive finance from CFI's approach?
Sure. This framework has 4 impact pathways: mitigation, resilience, adaptation, and transition. I will explain these pathways with some examples from Guatemala, where we applied this framework to assess the supply and demand of green inclusive finance. And I will relate these examples with some recommendations for the stakeholders. So regarding the first impact pathway, mitigation refers to the ways in which financial services can support reduce emissions by enabling the adoption of clean technologies and improving environmental conditions. In Guatemala, for instance, we know that rural population cook with open wood fire, and in response, FSPs can design financial solutions such as loans for clean cook stoves or renewable energy and waste management. The second pathway is resilience, which describes how financial services can support low-income people in preparing for, managing through, and recovering from risks and challenges associated with climate change. Again, in rural Guatemala, we saw that crops were affected by droughts. In this case, insurance companies can create weather index insurance products, and also FSPs can facilitate access to savings, which are products that are key to help people handle losses and rebuild their livelihoods after climate shocks. The third impact pathway is adaptation, which refers to financial services that support longer-term adjustments that poor and vulnerable communities need to make in response to current or future climate change shocks. For agriculture in rural Guatemala, this would mean financing products specifically designed for weather risks and financing better seeds, crop diversification, or water management technologies. Finally, the last impact pathway is transition, which refers to the role of financial services in supporting shifts to new livelihood strategies when previous ones are unavailable. So in Guatemala, for instance, educational loans provided by FSPs can enable other activities related to the digital economy when agriculture is not viable. Finally, for the displaced population, it is important to facilitate safe access to digital payments. So just to wrap up, the intended users of this framework are financial service providers, policymakers, development funders, investors, and other stakeholders in the inclusive finance ecosystem, looking to understand the various complex ways in which inclusive finance services can support improved outcomes for low-income and vulnerable populations in the context of climate change. This framework can be used for better design, implement, and measure the impact of these products when tackling climate shocks.
Thank you very much, Luciana, for this overview. And we look forward also to the publications and further results that you have from the project in Guatemala, and of course of the implementations of this framework from further stakeholders that has even guided other sectors such as the energy access sector. Welcome, Peter Setterly. It's a pleasure to have you here in our podcast of the Financial Inclusion Week. Today we are exploring with you specifically the work that you have been developing in green inclusive finance, and we'd like you to share how is CGAP approaching this subject and what have you been working on?
Thanks so much, Natalia. It's great to be here. Thanks for the invitation. So CGAP has been doing a lot of work on climate change and green finance for the past 2-3 years. That's partly due to our shift toward a more outcome-oriented view of what financial inclusion is all about, because from that perspective, helping vulnerable households manage the changing climate clearly emerges as a huge priority. It's partly also because we see a really important but underappreciated role for financial inclusion in the climate agenda. So when we look at the global climate finance conversation at the moment, we see intense discussion about how much money is needed, by when, who should pay for what, but a lot less focus on the question of who can access that finance. Specifically, how much money is making it to the grassroots level and into the hands of climate-affected populations, particularly low and middle income segments. There aren't great data on that question, but the data that do exist are not encouraging. The biggest study from 2003 to 2016 showed that it was less than 10% of climate finance that goes to local activities. So from where we're standing, that is problematic. And we think inclusive finance is a unique and underutilized tool for making that happen. And it's a bit of a missed opportunity for the climate agenda that these two sectors are not engaging more with one another in an intentional way. So we often hear in the climate finance space that there's not enough pipeline of investable projects. That's one of the most common complaints. But that leaves out the perspectives of the people themselves. Climate exposed households have plenty of pipeline of actions that they need to take. What they don't have is financing for them. To put that in climate language, we think inclusive finance can help to drive locally led climate action, which, as maybe you know, is a growing movement that's aiming to sort of devolve decisions and control of resources in the climate finance space as low as possible by involving affected communities. And we think, simply put, there's no greater way to do that than to put resources directly into the hands of climate vulnerable people. And the financial sector is a critical bridge for that. So we think inclusive finance has a really important role to play in the climate agenda. We think climate is becoming also a major priority for many inclusive financial institutions who are increasingly seeing their clients and their portfolios impacted by climate change. And they know more than anyone the need to respond to climate change. The problem is that climate change is a completely new topic for both financial institutions and their funders in inclusive finance, right? FSPs are not climate experts. They don't know what climate change means for their strategy, for their risk management, for their product offering. And funders and investors aren't climate experts either. They definitely don't have experience on what inclusive finance institutions need from them in order to offer effective solutions to their clients. So that is why we have been spending increasing amounts of time and effort on the climate agenda and on green inclusive finance over the last few years, and that body of work is only growing at CGAP.
As a new topic for the financial sector, and your work has been very relevant from CGAP to all the community, it will be good if you can let us know and share with the audience what frameworks is CGAP currently doing for supporting the different stakeholders, how should they use it, and what would you recommend for the implementation of this?
So we have been on an iterative journey where we've been putting things out along the way. The most recent publication of significance I would point people to is our paper 8 Billion Reasons, which came out in June of this year, and for which the World Bank President Ajay Banga very kindly offered to write a foreword together with the Queen Maxima from the UN. At the moment, we are developing multiple tools and frameworks to help both financial institutions and funders in the inclusive space respond to climate change. For financial institutions, we're building out a modular playbook covering strategy and risk management and product. It will help providers identify where they are in their climate journey, to see what their strategic options are, and identify the steps that they need to take to reach wherever they decide to go. It will also show them what climate risk assessment tools are out there and how they can be used for very specific analysis that the financial institutions need. So not just seeing risk exposure, but actually being useful in driving action, and what capacities they need to use those tools. Finally, we'll show them also how to think about product development around climate issues, and what promising innovations on product are out there that they could be testing with their own clients. We've already developed a simple taxonomy of climate responsive products that's available on our website, but this is going to go much further and talk about how you actually do product development and what directions that we see promise happening around the world. For funders and investors, we're developing two separate sets of guidance. One is a set of recommendations specifically on how they can best support inclusive financial institutions on climate change. That's based on our engagement with providers over the last 2 years. And it includes advice on how to support their strategy development, their risk management, their capacity development, and much more, not least enabling them to keep serving climate vulnerable clients even as climate risk grows in their portfolio, which is so essential for the core mission of inclusive finance. The other is a practical framework for how to build a financial system that is climate resilient and climate responsive, including an inventory of specific interventions that funders and other stakeholders can take. That's meant in part to support more effective collaboration between governments, funders, companies, and investors at the country level by enabling a shared analytical framework, a shared understanding of what is missing in a given market, and facilitating conversations around who can contribute to filling which of those gaps. So all those things are things that we're working on at the moment. We'll be starting to publish the first of these very soon, but then we'll continue expanding and iterating on it over the next 2 years. So I encourage anyone who's interested to stay tuned to us on LinkedIn and check out cgap.org/climate on a regular basis, because it's being updated all the time with new content.
Thank you, Peter, for this overview, and we will encourage people to stay tuned and follow all your publications for helping them in their journey of climate resilience.
Thanks so much for having me.
To close our round of interventions from our experts in green inclusive finance, we are going to invite to Laura Ramos, Senior Policy Manager for the Inclusive Green Finance Working Group of the Alliance for Financial Inclusion, AFI. And we'd like to listen to you, Laura, on the work that AFI has been doing in green inclusive finance.
Thank you. Thank you very much, Natalia. It's our pleasure to contribute to this podcast. Well, as a brief introduction, just let me tell you that the Alliance for Financial Inclusion is a global network of financial policymakers and regulators from 84 developing and emerging economies. And this is the only organization of its kind in the financial inclusion space that is fully owned and driven by its members. So we are having currently 90 member institutions make up the AFI network, including central banks, ministries of finance, and other financial policy makers and financial regulatory authorities. So AFI's core mission revolves around empowering policymakers to facilitate greater access to and utilization of high-quality financial services for underserved populations. This mission is achieved through the formulation, implementation, and global advocacy of sustainable and inclusive policies. So how we are approaching this topic? Well, the members of the AFI network have been pioneering this concept of what we call inclusive green finance. When they adopted for the first time the Sharm el-Sheikh Accord, this happened back in 2017, and they renewed the commitment just recently in 2022. And well, as we know, climate change poses significant risks to the financial system, particularly in terms of physical and transition risk. And this is where inclusive green finance really plays a crucial role to foster resilience to the negative impacts of climate change and environmental degradation through financial inclusion. As we know, this is a very evolving area, a policy area. And yeah, with financial regulators increasingly adopting measures, not only to build resilience, but also to expand access to green technologies and ensure that vulnerable populations are included in the transition to a low carbon economy. So this is why IGF focuses on ensuring access to formal services like savings, credit, insurance, and adequate payment systems, with the aim to build resilience, climate resilience, and also empower climate mitigation among low-income populations. So yeah, access to financial services empowers individuals and SMEs to climate mitigation and reduce the negative impacts of the environment.
Within the work that you have been doing at AFI, supporting regulators and central banks across the world, would like to, if you would like to share us about the frameworks that you have been developing in green inclusive finance, what recommendations you give about them, for whom are these intended?
Yes, so here at AFI, our first framework we developed was that we call 4 Ps. So these 4 Ps are promotion, that are policies and initiatives that prepare the private sector to offer financial services for green projects. The provision are those policies that help to ensure financial resources for green projects or related climate action activities to a specific beneficiaries. The protection policies are those that reduce financial risk by socializing potential losses through insurance, credit warranties, social payments, or other related risk-sharing mechanisms. And the prevention are policies aiming to avoid undesirable outcomes by lowering financial, social, and environmental risk. So these are the 4 Ps, that is promotion, provision, protection, and prevention. But as I mentioned before, this policy area has been evolving over the years. And in 2020, the AFI IGF team, in collaboration with the Center for Sustainable Finance at SOAS University of London, reshape a little bit this framework. And well, the rationale is that scaling up IGF serves 2 key policy purposes that actually are adaptation and mitigation. And while some policies may address both, most fall into one category only, allowing policymakers to focus on their specific environmental challenges. So this is how we saw that also, for example, adaptation policies help vulnerable populations build resilience to climate-related disasters, while mitigation policies target the reduction of anthropogenic warming and environmental degradation. So we also know that AFI IGF policies can be direct, where the state plays an active role by allocating resources, or indirect, where the government sets market rules and incentives for the private actors to develop inclusive financial services. So also we just understood that market shaping IGF policies are critical, particularly in creating the right incentives for private sector competition to provide green finance services that support vulnerable populations. And it is clear that under a well-regulated market, private solutions, such as, for example, such as mobile money or innovative financial products, are proven to increase resilience in climate vulnerable populations, sometimes more effective than direct government interventions. At the same time, direct interventions in the financial market fall into the categories of provision and protection. So these policies aim to either foster adaptation and resilience to environmental change or mitigate its impact. Online market shaping policies, direct interventions, involve deliberate government actions, often supported by budget allocations to address environmental challenges through the financial sector. Typically, central banks and regulators focus more on market shaping policies with their supervisory roles. So if you can see this approach, this new approach really aligns with the previous AFI 4P framework. So it's not like a really new, it's just a different way of classifying such policies or intervention. But however, for the IGF implementation, in 2022, AFI, in coordination also with the University of Luxembourg, and based on the research of international approaches and AFI members' experiences, come up with a roadmap to implement IGF policies that is not different from the other framework. This is more like a practical steps in order to implement IGF policies. And yeah, we come up with the, this approach identifies IGF as a subset of sustainable finance and shows that a successful IGF framework relies on 6 building blocks that we call building blocks, and also identifies 5 policy tools to further advance the implementation of IGF policy. So yeah, mainly these the 6 pillars or these 6 building blocks are, for example, the first one is adopting an IGF strategy at the highest level of financial regulator, and this will be aligned with the national climate goals and policies, supported by a strong governance and coordination across public and private sector. The second one, and not necessarily has to come in this order, but the second one could be classifying IGF compliant products and services through a taxonomy, for example, that distinguish desirable from undesirable economic behaviors. The third one could be prioritizing IGF within financial institutions and regulators by implementing, for example, sustainable banking principles or ESG framework. The fourth one is data and models, because these are essential. And yeah, improved measurement techniques are always needed, and also it's also important for investments and reporting. The fifth one is the strengthening the IGF ecosystem with the specialized data intermediaries, technology providers, education, also to support sustainable finance. And the last one could be building financial infrastructure and resources. Also, this includes technical systems that facilitate financial transactions and services, because this is also crucial for the success. So yeah, I think that, well, one key recommendation that we can see for this is that IGF frameworks require solid and long-term political support driven by dynamic regulator with devoted expert resources and a strong role in shaping the regulatory framework. Also, well, in conclusion, I think the regulatory tools for inclusive green finance must evolve and be refined over time, aligning with the capacity of both regulators and also financial institutions. And yeah, countries may start, with a broad environmental and social risk management guidelines, for example, and then also through sustainable banking principles, and gradually they can add more detailed elements in their as the experience also grows. And yeah, while mutual learning also from other nations are valuable, each country faces unique challenges in financial inclusion and climate change. So therefore, solutions must be specific, country-specific, and tailored to the needs and priorities of each member or of each country.
Thank you very much, Laura, for this overview. And as you said, encouraging mutual learning will be key for the success of green inclusive finance in the financial inclusion sector. We thank the Center for Financial Inclusion and its Financial Inclusion Week for enabling this opportunity of delivering such a podcast and listening from the expertise and the work that multiple organizations are doing in order to support FSPs, impact investors, consultants, regulators, and more in advancing in green inclusive finance.